It's not every day that you can say you own a dividend stock that has been paying increasing dividends every year since before Disneyland opened in 1955, since before the Vietnam War started, before NASA was formed, before anybody owned a Corvette. This dividend stock has been paying a dividend to investors and raising that dividend every single year. We will look at everything you need to know, including all of the relevant dividend metrics, everything you need to know about the company, and ultimately, does it make sense for you to own this dividend stock? Ladies and gentlemen, I give you the longest paying dividend increasing stock in the world. Alright guys, let's dive in here. We're talking about the American States Water Company. Ticker symbol AWR. American States Water is in the utilities sector of the economy, and wait for it, they've been paying dividends now every single year and increasing their dividend for 68 consecutive years. Now you might be thinking to yourself, American States Water Company, that sounds like a boring dividend stock. And you would be correct. But it's boring for all of the best reasons possible. Let's learn a little bit about American States Water Company. American States Water Company is the parent company of Golden State Water Company, Bear Valley Electric Service Incorporated, and American States Utility Services Incorporated. They serve over 1 million people in 9 separate states. Through its water utility subsidiary, Golden State Water Company, they provide water service to approximately 263,000 different customer connections in more than 80 communities in northern, coastal, and southern California. Then they have an electric utility subsidiary, Bear Valley Electric Service, which distributes electricity to approximately 25,000 customer connections in the city of Big Bear Lake and surrounding areas in San Bernardino County, California. And through their other subsidiary, American States Utility Services, they provide operations, maintenance, and construction management services on 11 military bases throughout the country under 50-year privatization contracts with the U.S. government. Now, let's just stop right there. 3 separate and distinct types of businesses in the utility sector. We have electricity, we have water, and we have contracts with the United States government for military bases. And I just spoke about 50-year privatization contracts. We're already talking about stable income when we think about utilities, but when we factor in 50-year government contracts, you can't get much more stable than that. This company has been paying dividends to shareholders every year since 1931, and they've been increasing the dividend every year for 68 consecutive years. In looking at their 2021 annual report to investors, you can see their income breakdown by segment. The majority of the income is definitely coming from their water utilities business. $347 million from water revenue, $38 million from electrical revenue, and $113 million from contracted services. Current price per share for American States Water as of November 15th, $94.89 per share. But what I really want to point out is their dividend growth rate. Remember, this is the key for dividend cash flow investors. Do we like high dividend yields? Sure. But we should be just as equally interested in how that dividend is growing year over year, because we know about inflation. We know inflation destroys our purchasing power and our dividend growth. You can see here the 1-year dividend growth rate is 9%, the 3-year average dividend growth rate 9.9%, the 5-year dividend growth rate on average 9%, and the 10-year growth rate over the past 10 years on average, the dividend has been increasing every year by an average of 10.1%. Now, there are 2 things that are big considerations when you're looking at this dividend stock. Number 1 is the dividend yield. Right now, the dividend yield is only 1.68%. The historical 5-year average dividend yield is 1.63%, which is a discount of only 3% right now. Now, this is probably the biggest thing right here we should be looking at. The dividend payout ratio. In other words, how safe is the dividend? This appears to be a significant warning sign. The 1-year historical dividend payout ratio based on free cash flow is negative 224%. And that's short for the fact that there is no free cash flow. And the trailing 12 months is negative 162% here. But let's dive below the surface. All right, I'm on the Morningstar website here, which is one that I like to look at because it shows free cash flow, and it gives a really good look into financial statements. We're going to take a deep dive into the cash flow statement for American States Water Company. Let's flip from income statement to cash flow. We want to know where the cash is going in and out of the business. The way that we can calculate free cash flow is by looking at cash from operating activities and subtracting out any capital expenditures, meaning investing back into the business into equipment such as factories or pipelines, etc. Here is our total cash flow from operating activities. right here. And you'll notice on this line that the total cash flow from operating activities is actually pretty stable. 144 million, 136 million, 116 million, 122, 115, and on track for the trailing 12 months of $123 million. However, one of the biggest expenditures that energy companies and utilities companies have are capital expenditures, investing back into the machines and the structures that help deliver your business. And that is reflected right here on our capital expenditures line. Despite the fact that we have all this cash flow every single year, we can see that the capital expenditure is higher every single year. Looking at just the trailing 12 months, if we took $123.59 million and subtract $159.85 million, that leaves us with a shortfall in cash flow of $36.26 million. Now we can make up that deficit in one of two ways. Either we already have enough cash on hand, or we have to increase funds by borrowing money, aka debt. And here's where we find our answer. We had that shortfall of $36.26 million. We can see that there are proceeds from issuance of long-term debt. This year, we've borrowed $86.33 million and repaid $0.38 million for a net issuance of debt to the company of $85.95 million. So we can take plus $85.95 million means we have $49.69 million available to pay dividends. And you can see common stock dividends were paid here of $53.94 million. And if we scroll down, we can see that there was cash on hand. So in reality, when we look at this company, we see that there's a lot of cash flow. There's a lot of investments back into the business year over year, and in situations when there's not enough cash to pay the dividend, they do borrow money, and this is long-term issuance of debt. With all these factors in play, something like this could be concerning for an average dividend stock. When I think of American States Water, it's not as concerning to me because I understand how the business works, I understand it's capital intensive, and they have a very stable and consistent method of generating cash. So at that point, the biggest concern remains, well, do I really want to own this dividend stock if I'm getting a yield of only 1.68% right now? That is such a small amount of cash being generated when you factor in other investments that can generate 5, 6, 7, and 10% yields. It's true that right now at prices of $94 or $97 a share, you don't get much yield. So one solution is to only buy American States Water when you get prices down right around here, like May of 2022 or June of 2022, around $71, $72 per share, which pops your yield over 2%, 2.2, 2.3%, but that still might not move the dial much for you. One other consideration, especially for investors out there that like to utilize options, is selling covered calls on this company. Here's the option chain for American States Water Company. You'll notice that the option contracts expire monthly here. We don't have the ability to sell on a weekly basis, but that doesn't mean that there's not enough cash flow to make this worthwhile. You can see the separation between the strikes is $5 per share. So let's just say we wanted to sell a 30 days, right, December 16th. Let's say we wanted to sell approximately 30 days out for a covered call, and we bought it around $96, as we see right here. We can use a $100 strike price and generate between $120 and $340 a month. Now, first thoughts here are, man, that is a massive spread. And it is. You don't want to see this big of a bid-ask spread between 120 versus 340 here. Big difference. You usually want to see 120 to 125, 120 to 130, 120 to 140, but this is a big spread. So let's just be ultra conservative here. Let's assume that we could generate only $120 for this option. And since we know that option premiums are elevated right now, let's assume that ongoing, we can only generate really $1 per share. Remember that American States pays an annual dividend of $1.59 per share. So if we just assumed that we only earned $1 per share, or $100 per selling the call option if we owned 100 shares, we'll take 1.00 and we'll say we can do that once a month, which I know that we are making a massive assumption here, and maybe it's below $1, but we're already being conservative by choosing $1 here, and this is a 0.08 delta, which means unlikely to end up in the money. So let's assume $1 here, but we're going to do it 12 times a year. That gives us $12 per share in annual cash flow, but we've got to add in that annual dividend of $1.59 per share, which gets us to $13.59 per share. We take that number, we divide it by the current price per share, $96.29 per share. That gives us an annual yield of 14.11%. That is massively higher than the what, 1.7, 1.8% we were looking at if we just received dividends. So let's transition now to what type of dividend investors does this dividend stock make sense for? If you're a dividend investor that doesn't like using options, that likes to have a lot of stability, then you could make a place for American States Water in your portfolio, but you don't get a lot of dividend yield. So it wouldn't want to be a significant portion there unless you had a lot of money and you like to have really safe and stable dividend stocks. But at this point, you might be thinking to yourself, instead of just investing a lot of money in American States Water, might it be a better solution then to just go buy a dividend ETF, such as SCHD, which also grows its dividend well and gives you a larger dividend yield than you would get with American States Water? And that's a really compelling argument. In my mind, the only real way you can make a case for owning American States Water, given the dividend yield being so low, is if you can sell covered calls on some level. Maybe you're more conservative than we talked about, maybe you sell it only once in a while, but if you're not going to sell covered calls, then there might be better options out there because of the dividend yield. Otherwise, I have really nothing bad to say about this company. A really safe and reliable dividend paying stock with 68 consecutive years of dividend increases. Really great dividend growth rates, increasing the dividend by 9, 9.9, 9%, and 10.1% over the past 1, 3, 5, and 10 years. Make sure to leave your 2 cents down in the comments below. Let me know what you thought about this dividend stock, whether you currently own it already, whether you think it's a good fit for your portfolio based on what you were trying to accomplish in your own portfolio. I respond to all comments that I get on the day I post a video. And let me know other dividend stocks you want me to highlight as well. I've already got the next few lined up, but I want to make as many videos as possible that you guys think is going to be valuable for your portfolio. That's all I got for you guys in this video. Have a great rest of your day, and thanks for watching.